Hey, how's it going? This is Seven. I just wanted to show you in chapter 2 of The Intelligent Investor something that's super important that I think many people should read. And in this part, it's about investors and inflation. And this is one that specifically now is also very important. And inflation and the fight against it has been very much in the public's mind in recent years. The shrinkage in the purchasing power of the dollar in the past, and particularly the fear or hope by speculators of a serious further decline in the future, has greatly influenced the thinking of Wall Street. It is clear that those with a fixed dollar income will suffer when the cost of living advances, and the same applies to fixed amount of dollar principal. Holders of stock, on the other hand, have the possibility that a loss of the dollar's purchasing power may offset by advances in their dividends and prices of their shares. On the basis of these undeniable facts, many financial authorities have concluded that bonds are inherently undesirable form of an investment, and consequently more common stocks are by their very nature more desirable investments than bonds. We have heard of charitable institutions being advised that their portfolio should consist 100% of stocks and 0% of bonds. Now, this book specifically is super amazing at describing different problems that even go on in today's society. This book was written many years ago and it's still the same thing about inflation. I mean, right now in 2025, inflation's crazy. I mean, it's absolutely wild, especially for people on fixed income, which is a majority of the country. Like, many people don't even have a variable income when it comes to the stock market. But the truth is that everyone can actually participate in it, especially if you think about investing in putting a certain amount every month away and letting that money compound, that you actually are making a lot of money in the future. Now, it does take a lot of time, but the thing is that you will actually beat the dollar's purchasing power because you'll beat inflation, but also the actual capital appreciation of that asset, which makes you more money than you actually realize sometimes. Some years it might be like 20-30%. Some years you'll lose a lot. The thing is, on average, is 10%. That's way better than inflation. And that's better than any job when you think about how you get taxed on certain dividends and withdrawing capital if it's a long-term capital gain. And this first part of the investor and inflation on page 47 really signifies a huge problem in this country right now, that the fixed dollar income and the cost of living, like, that's horrible, but then the stock market is doing better than ever. And this is just a perfect way of describing it. And I think this is something that's super valuable that everyone should read the book, but these parts specifically that I'm sharing are the most important parts that anyone can take away something from. And thank you, because this is a bit long.